So, you're turning 72. Congratulations. Whether you're watching from Los Angeles or London, welcome to Retired and Inspired. Now then, you've reached a milestone that's recognised by governments on both sides of the pond as a major financial turning point. In the eyes of the IRS in America and HMRC in the UK, 72 is the year the rules of the games change. Today, we're pulling back the curtain on the reality of turning 72. We're talking about the stuff no one tells you about until the tax bill arrives. We're covering the 3 global challenges. Now then, taxable income traps. The truth about your benefits and the healthcare realities that no one wants to talk about. I'm going to show you how to navigate these waters so you can stay retired and inspired rather than retired and tired. Let's start with the biggest surprise, the tax trap. In the US, 72 is critical age for RMDs, required minimum distributions. The government forces you to take money out of your 401k or IRA whether you need it or not. In the UK, while we don't have mandatory withdrawals, we have the frozen tax threshold problem. Because the personal allowance isn't rising, your state pension and private pension drawdowns are likely pushing you into a higher tax brackets every single year. Here is the reality check. Your pension or retirement fund is not a tax-free gift, it's a deferred income. At 72, the debt to the government is coming due. If you don't have a strategy to manage these withdrawals, you're literally giving away your hard-earned savings. Government benefits, the maximum potential. Now, look at the money on the screen. The thumbnail, dollars and pounds. Both are facing inflation. In the US, if you waited until 72 to claim Social Security benefit, you are now at your maximum benefit. But watch out for the tax torpedo. Here is where your RMDs can make your benefits taxable. In the UK, you've likely had your state pension for a few years, but is it enough? Thousands of people over 70 miss out on pension credit or attendance allowance because they think they don't qualify. That's in the UK. Get that application in now. The government's just withholding money from you. You need to get that application in right away. The reality of 72 is that you can't rely on the government cheque alone. You have to be the CEO of your own cash flow. Next up, the healthcare at 72, the dashboard lights are on and the body starts blinking a bit more often. In the US, you've been on Medicare for 7 years, but the reality is if your income spikes because of those RMDs, you might hit IRMAA surcharges. You pay more for the same coverage. One of the penalties of getting older, I'm afraid. In the UK, we have the NHS, but the reality now is just the waiting lists. They're huge. Say they're getting them down, but I've spoken to people in the healthcare system and it doesn't look like it's really working at all. They just throw more money at it and don't actually challenge the main issues in it. I don't know what the answer is. Many 72-year-olds now self-insuring, setting aside a specific pot of money to pay for private treatment if the NHS leaves them waiting. Don't blame them really, but it's sad that we have to do it. Whether it's premiums or private fees, your healthcare budget at 72 needs to be more robust than it was at 65. Global strategies to stay inspired. So, how do we fight back? First, look at gifting. In both countries, reducing the size of your estate can now save your heirs a fortune later on. In the UK, remember the 7-year rule. In the US, use your annual gift exclusions. Second, re-evaluate your asset allocation. At 72, you don't have the same time horizon you had at 50, that's for sure. You need growth to beat inflation, but you need protection. Third, look at charity. In the US, use QCDs to satisfy your RMDs tax-free. In the UK, use gift aid to lower your taxable income. The reality of 72 is moving from saving mode to smart spending mode. Can't speak right today. I think I need a sip of tea. Let's have a look. That's better. Turning 72 isn't as scary if you have a plan. It's an opportunity to optimise your finances for the next 2 decades. You've earned this retirement. Don't let taxes or poor planning take the inspiration out of it. If this global perspective was helpful, then hit that like button, subscribe and share. In the US or the UK, everybody welcome. Very nice to communicate with our cousins from over the pond. Let's use our accumulated knowledge to help each other on both sides of the pond. We're here to help you navigate every single stage of this journey. Please comment below what's the biggest surprise you've found in retirement so far. I'm John, and as always, stay retired and inspired, and I'll see you in the next one. Bye.